Welcome to AI World TV, your go-to destination for everything artificial intelligence. Discover the captivating landscape of AI, where advanced technology finds real-life application. Subscribe to AI World TV for webzine articles, reports, podcasts, videos, live events, and latest trends. Hear from top industry leaders and discover how AI is transforming industries and our daily lives.
Okay, let's unpack this. Imagine turning on the news to hear that the economy just grew by 10%, right?
Right.
The stock market broke literally every single historical record, and corporate profits have just never been higher. But then you walk outside your front door and realize half your neighborhood just lost their jobs.
Yeah, it's a terrifying scenario.
It really is. Welcome to another deep dive. Today we are exploring a really wild paradox. What actually happens when a booming, healthy economy just doesn't need humans anymore?
Well, we're basically looking at a fundamental breakdown in how we measure success. I mean, for nearly a century, we've relied on these very specific economic dials and gauges to tell us if society is, prospering. But we are entering an era where those gauges might be measuring the entirely wrong things.
Yeah, and today's mission is decoding that exact disconnect. We're examining a scenario where the broader economy looks incredibly healthy on paper, but millions of everyday people, and hey, maybe even you listening right now, feel completely financially left behind. Because if you're trying to navigate your career or plan a pivot or figure out where to put your investments, understanding this shift is just absolutely crucial.
Oh, the stakes are incredibly high here. We aren't just talking about, a temporary blip in the job market.
Right.
We are talking about a permanent rewiring of how value is actually created and distributed.
So our guide for this rewiring is this single, incredibly timely source. It's a fascinating article from the AI World Journal. It was published on June 2, 2026 by Sydney Armani, and it's titled The AI Economy: Will Recessions Look Different in the Age of Artificial Intelligence?
A great piece.
Yeah, it really is. And to understand why this is also scary, you kind of have to realize that for the last 70 years, we relied on a totally different, highly predictable rhythm to tell us when things are going wrong.
Right. Like from the 1950s onward, the U.S. economy was actually remarkably consistent. Every 5 to 6 years, on average, a recession hit.
Like clockwork.
Basically, yeah. It was viewed as part of the natural, unavoidable business cycle. And the classic symptoms were always there, acting in complete synchronization,
Right.
Overall economic output would fall, businesses would actively decline their investments, job losses would aggressively rise, and everyday consumers would immediately pull back and just spend less.
So the traditional indicator of recession was just a sustained decline in economic activity, literally across the board.
Exactly. The economy looked sick because the economy was sick. The symptoms were universal, like if manufacturing was down, retail was down, and employment was down.
It's like the economy used to breathe normally,
Yeah.
right? Like inhaling expansion, exhaling a recession.
That's a great way to put it.
But for the last 20 years, well, excluding the brief external shock of the 2020 COVID shutdown, it's like we've just been holding our breath. We went almost 2 decades without experiencing that historical, traditional variety of recession.
Yeah.
So why did that cycle suddenly stop?
Well, economists point to a few massive interventions that altered that breathing pattern. First, the extraordinary severity of the 2008 financial crisis essentially purged all the excesses from the system in one brutal sweep.
Wow, okay.
Yeah, which created a much longer runway for the subsequent recovery. But the real mechanism that kept the expansion going was quantitative easing.
Wait, let's pause there because we hear quantitative easing all the time in the financial media.
Sure.
But what does that actually mean in practice for a normal person?
Good question. In the simplest terms, quantitative easing is when a central bank, like the Federal Reserve, essentially creates new money to buy government bonds and other securities from banks.
Oh, I see.
So by doing this, they pump massive amounts of cash directly into the banking system. The banks, suddenly flush with all this cash, are highly incentivized to lend it out at rock-bottom interest rates to businesses and consumers.
So it creates what we call unprecedented financial liquidity.
Exactly.
So it's basically just cheap money desperately looking for a place to go.
That's exactly it. And that cheap money fueled massive global tech innovation and continuous business expansion, effectively artificially delaying the natural recessionary contraction.
Wow.
We were essentially pumping the system full of financial adrenaline for nearly 20 years.
Which brings us right to the present day. We have this 2-decade anomaly colliding with a massive new variable entering the picture, which is, of course, artificial intelligence.
Right.
And the AI World Journal piece warns that AI threatens to completely decouple economic growth from human employment.
Yes. Historically, growth and employment were locked together in a very reliable equation. When a business expanded, they inherently needed to hire more workers to handle that expansion.
Right. More products meant more factory workers.
More sales meant more accountants. And as corporate productivity increased, widespread wages eventually followed suit. So economic prosperity was reflected in both corporate performance and household well-being.
Okay, let's ground this in reality, because the AI paradox totally shatters that equation.
Yeah.
Imagine a mid-sized marketing firm. 2 years ago, they had 50 copywriters, graphic designers, and data analysts on staff. Today, they replace 47 of those people with 3 prompt engineers and an enterprise-grade AI suite.
Oh, yeah.
And the firm's output doesn't just stay the same, it actually increases. They produce more campaigns, faster, and with way fewer errors.
And if you look at the underlying mechanics of that profit and loss statement, it's staggering. The firm's top-line revenue stays strong, perhaps even grows.
Right.
But their labor overheads, so salaries, benefits, office space, has just plummeted. Their profit margins absolutely skyrocket.
Which is wild.
And because of those surging profits, national GDP climbs and the stock market heavily rewards that firm's new efficiency with massive valuations.
But 47 people just lost their incomes.
Exactly.
They aren't participating in those economic gains at all.
Yeah.
So what does this all mean? Like, I'm looking at my own retirement account right now, and it's doing great because of these tech surges.
Right.
It's just really hard to reconcile a booming stock portfolio with the idea that the middle class is deeply suffering. How do we square that circle?
Well, what's fascinating here is that this creates an entirely new dilemma for economists. The national statistics and the individual everyday experiences are just aggressively diverging.
Yeah.
If AI allows businesses to maintain strong profits and high productivity while actively slashing the need for human labor, our traditional economic measurements become completely blind to what the average citizen is actually experiencing.
Yeah.
Because the stock market measures corporate profitability, not human employment. GDP measures total output, not who actually gets the money from that output.
So the dashboard says perfect performance, but the wheels are actively falling off the car for the middle class.
Yeah, exactly.
And because of this frightening disconnect, economists are violently split on what happens next. The article outlines 2 major camps here. The first camp is essentially saying, hey, we've seen this movie.
You are listening to the AI World Podcast, your trusted source for the latest innovations, insights, and trends in artificial intelligence, blockchain, fintech, and decentralized technologies. Each episode features expert interviews, engaging discussions, and in-depth analysis of how AI transforms industries worldwide. Stay ahead of the curve with the latest articles and exclusive reports from the AI World Journal, covering everything from emerging technologies to industry breakthroughs. For more news, global events, and access to AI World Society circle gatherings, visit us at aiworld.tv. Don't forget to subscribe to stay informed, stay connected, and be part of the AI revolution with AI World Lounge. Thank you for listening.
Before, Stop Panicking.
Right.
They point back to the Industrial Revolution, the advent of electricity, the automobile, the internet. Every single one of those massive waves of innovation caused deep anxiety and completely disrupted existing jobs.
Right. I mean, entire professions were wiped out. The carriage makers lost their jobs to the automakers.
Exactly. But that first camp argues that eventually those disruptions created entirely new industries and new careers we couldn't have even imagined at the time, which led to much higher living standards across the board. So to them, AI is just the newest chapter in a very old book.
Right. But then the second camp argues that AI is fundamentally, categorically different from anything humanity has ever invented.
How so?
The crucial distinction is that AI performs cognitive tasks, not just physical labor. It isn't just a forklift lifting heavier boxes,
Yeah.
It is a system writing complex financial reports, generating original software code, conducting deep pharmaceutical research, and increasingly assisting with high-level professional decision-making.
Okay, here's where it gets really interesting. But didn't we panic about calculators and computers too?
We did, yeah.
People thought machines doing complex math would put accountants and actuaries completely out of work in the 1970s. But it didn't. It just made them faster. Why shouldn't I just view AI as like a really advanced calculator?
Well, if we connect this to the bigger picture, we have to look at the nature of the replacement. A calculator executes a static formula that a human gives it.
Right.
The human is still doing the thinking, the machine is just doing the arithmetic. AI, specifically generative models, operates differently.
Oh, I see.
Generative models don't just search a database for a pre-written answer. They recognize patterns to create net new content, logic paths, and strategies. They are beginning to replace the thinker and the decision maker themselves.
Ah. So previous tools basically replaced muscle, which forced humans to move up into mind-based work.
Yes, exactly. The historical pattern relies entirely on human cognitive superiority to find new, higher-level tasks once the lower-level manual tasks are automated.
Oh, wow.
So if AI takes over the cognitive higher-level tasks too, the promised cycle of job replacement followed by job creation breaks down. Where do humans go when the machine is better at both physical lifting and strategic thinking?
Okay, that is a deeply sobering thought. If it's replacing the brain, the historical safety net just vanishes entirely.
Pretty much.
But, this digital brain doesn't just exist in a vacuum. It lives on servers, relies on power grids, and has to interact with a very messy, physical, geopolitical world.
It definitely does.
And the AI World Journal article pivots right here to explore the ripple effects of an AI economy colliding with real-world physical constraints, starting with oil.
Right, because we cannot analyze the AI economy without acknowledging that the global economy is still heavily dictated by the price of oil.
Right, of course.
AI introduces a massive variable here through energy efficiency. Think about hyper-smart grids. Currently, we lose a lot of power in transmission. Or we burn natural gas as a backup because renewable energy is unpredictable. But an advanced AI system can predict exactly when the wind will blow across the Midwest, instantly route that power to a server farm in Texas, and balance the grid in real time.
Oh, wow.
Which drastically reduces the need for fossil fuel backups.
So if that kind of optimization scales globally, alongside perfectly optimized shipping logistics and, electric vehicle adoption, global demand for oil could just plummet.
Oh, absolutely.
And the article points out how deeply that impacts petrostates.
Right. Petrostates are countries whose entire government budget, social safety nets, and political stability relied almost exclusively on exporting oil.
Like nations in the Middle East or parts of South America.
Exactly. So if AI drives down global oil demand rapidly, the revenue of those petrostates just collapses. We're looking at the potential destabilization of entire geopolitical regions.
That's huge. But the article also offers the flip side, right?
It does.
Like, AI could be used by those very same oil companies to map geological data perfectly, finding new reserves and dramatically lowering the physical cost of drilling and extraction.
Which is completely plausible.
Yeah, and that totally changes inflation dynamics globally, basically making energy incredibly cheap.
And it changes how we handle geopolitical conflict, too.
Oh, yeah?
Yeah, the source material specifically highlights physical supply chain choke points, like the ongoing Houthi conflict disrupting shipping lanes in the Red Sea.
Right. We've all seen the headlines there.
Exactly. Historically, a disruption there means human logistics managers scrambling for weeks to reroute cargo, causing massive delays and price spikes at the grocery store.
So how does an AI economy handle a crisis like that differently?
Well, through algorithmic risk assessment and autonomous fleets.
Okay.
An AI system monitors real-time satellite imagery, geopolitical news feeds, and threat data. The millisecond a physical shipping lane becomes compromised, the AI autonomously reroutes a fleet of automated cargo ships around the danger. It adjusts port schedules globally, calculates the new fuel costs, and reprices the end consumer goods instantly.
Building incredible supply chain resilience without a single human meeting.
Exactly.
It's kind of like dropping $1 million next-generation supercomputer into a 20-year-old car.
That's a good analogy.
Like, the navigation system is absolutely perfect. The calculated route is mathematically flawless. but the car still runs on physical gas, and it still has to literally drive over physical potholes to get to the destination.
That's a really great way to look at it. It is a profound shift in how nations manage crises.
Yeah.
In the past, economic resilience meant the government stepping in with massive financial bailouts, mailing out stimulus checks, and tweaking interest rates to save failing industries.
Right.
In the AI economy, resilience won't be about financial intervention after the fact. It will be about predictive, algorithmic risk assessment, routing around the problem before humans even realize it happened.
Man. So just to pull all of this together,
Yeah.
if the fundamental nature of work is changing, if the way we produce goods is decoupled from hiring, and if global risk is managed by algorithms rather than central bankers, our core measuring sticks just have to evolve.
They absolutely must. The source material singles out gross domestic product, or GDP, as the prime example of an obsolete metric.
Right.
GDP was developed for a bygone industrial economy. It counts the total monetary value of all goods and services produced.
Right.
It was built for a world where the production of goods and human labor were tightly, undeniably linked. You make more steel, you inherently need more steel workers, GDP goes up, employment goes up.
Right. But what happens when an AI system writes a billion-dollar software platform overnight or fully automates a global shipping logistics network?
Exactly.
The value created is enormous. GDP explodes upward. But human employment in that creation process, basically zero.
Right, and traditional measurements like GDP will just continue to rise, telling policymakers and investors that the economy is fantastic.
Even when it's not.
Right, those numbers will no longer tell the full story of human prosperity.
So the ultimate challenge for the future isn't going to be identifying a traditional recession. I mean, we might never see a classic 1970s or 1980s style recession again.
Probably not.
The real challenge is understanding and, surviving an economy where endless growth and surging corporate profits become completely disconnected from the actual population.
It is the defining economic challenge of our time. We are entering a reality where economic growth and human prosperity are separating at a speed we have never witnessed.
So for you listening, we need to make this actionable. The next time you are looking to switch industries or evaluating a company to invest in, don't just look at their quarterly profits. Look at their hiring page.
That's great advice.
Are they actively expanding their human workforce to meet new demand? Or are they just boasting to their shareholders about how efficient their new automated workflows are? You have to ask yourself, are the green lights on the dashboard actually telling the truth about the engine, or are they just measuring the software?
And, this raises an important question, one that we all need to start grappling with right now.
What's that?
If human employment and corporate productivity completely decouple, and a traditional wage no longer functions as the primary mechanism for distributing wealth in society, what entirely new system of value exchange will have to replace the standard paycheck?
The future of artificial intelligence is unfolding, and it's happening at AI World Week, the flagship global event for innovation, collaboration, and transformation. This flagship global AI event is designed to connect visionary leaders, trailblazing entrepreneurs, and influential thinkers to explore the endless possibilities of AI. Experience groundbreaking technology that redefines industries and inspires progress. Join thought-provoking discussions on ethical AI, digital equity, and the transformative role of technology in our world. Build meaningful connections that catalyze innovation and drive impact. AI World Week is powered by AI World Society, a global movement dedicated to advancing AI responsibly and ensuring it serves humanity. Together, we're shaping a smarter, more inclusive, and equitable future. Continue your journey beyond the event with the AI World Journal, offering expert insights, in-depth analysis, and the latest trends shaping the AI landscape. This is your opportunity to lead, to innovate, and to transform the world with AI. AI World Week. We invite you to join us and embrace the AI revolution.